Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Wednesday, February 9th. It is 6:15 as I'm starting the video. Okay, let's start off with 10-year 10-year yields. We've broken above this 1.93%. which had been an overhead resistance level for quite a long time. We're trading here about 1.95%. One thing I forgot to do is go over the futures and the macro. So let me do that real fast because there's a tie into it. Bitcoin's down 2%. Equities are showing a nice lift this morning between 0.75 and 1%. Oil's down about 0.5%. On the macro front, we've got mortgage applications, wholesale inventories, oil inventories at 10:30, a couple FOMC speakers, and then we've got a 10-year bond auction this afternoon at 1 p.m. And then following that up tomorrow morning before the bell, we've got CPI print. That'll tie into rates as well. And then over on the earnings front, before the bell this morning, CVS, Teva, Williams-Sonoma, Yum Brands, Honda. After the bell, Disney, Uber, Twilio, Mattel, and Sonos. You can get the full list on the blog site. And if you want a more in-depth list, you can always go to earningswhispers.com. We're still in the thick of the season, so if there's a specific name you're trading and you can't figure out when earnings are, they're a pretty good resource for that. So getting back to rates, we've broken above this 1.93%, and now we've got an open door to 2%. That'll probably be a psychological level there, I would think, where we might see some consolidation right around 2% after this, what would be a pretty big run. But we've got, I think we've got to listen to the FOMC speakers a little more than normal if they start signaling something out of the ordinary. And we've got the potential of, a CPI print that comes in crazy that might give an outsized move. So if we know that rates are going up, we got TLT going down, and we've broken below back into the range of this $5 consolidation that we had way back in the spring. And we spent a lot of time up here, but then now kind of rolling over and down below this 139 level and into the old range. And remember what we always say, once you depart from a range, if you are to re-enter it, then the natural target is the bottom of the range. So from a technical standpoint, the door is open for a move down to 134. Now that probably won't happen in a straight line. We've got a midpoint here at 136. So one of the things that you could do, if you were interested, is you could get short with like a 138, 134 put spread out in time. You could go, straight 136s if you wanted. Or you could go, if you wanted a little bit more delta, you could go 138 or 139. But your stop has to be, I would say, just above 139. And like anything else, we've seen some volatility. You don't want to, get into this thing with a micro stop, because it's just, it's probably just going to get hit right away, right? Just come up a little bit, clip your stop, and then go down. So I would trade a little bit smaller there if you were going to do it. So, I mean, there's a trade for you there. Here's the New York oscillator, the NIMO. You can see we're here in the middle of the range. But what I wanted to really show you, and I have both charts on the blog this morning so you can dial it in a little bit closer, is over on the Nasdaq. Look at the jump. We're up here near 40, and you can see right here we reversed at 36.98. We actually closed above the place where we reversed last time. So now I think we've got to raise the antenna a little bit. I mean, there's still room to the upside on this oscillator, but look at over the last year in 2021. Reversal 48, reversal 52, reversal 49, reversal 30. You can see right here we had a 57, it looks like, then a 51, then up here we got above. But my point is, the rubber band is getting stretched again, and we've got to be cognizant of that fact going forward. So much more of a antenna up situation than we are on the NIMO. So keep that in mind. And I don't know, I'm starting early today. I don't know why I feel rushed. Maybe it's because I'm using this new system I got and I'm not quite sure what's going to happen. But make sure you run the player at 1.5x. We'll get through it a lot faster. So yesterday was more volatility within the range, pretty wide ranging. We had a low of 445 and a high of, call it, 452. So I mean, you know, $6-7 intraday. I mean, that, if you are good at catching bottoms and reversals, there were certainly some trades to make there. But anyways, we've been keying off this 450, and I think it's a good number. Basically, having a bias of being bullish above 450 and more bearish below. And here we are in the SPY 2-hour chart, this consolidation in here over the last several days. Probably, you know, if you're not good at catching reversals, it's just chewing you up. So if you're doing well in this bounded trading range environment, by all means keep doing it. If you feel like you've been getting chopped to pieces, take a step back and wait for a stronger signal. So one thing I wanted to point out here, we know we're up in the futures, and look at the PPO momentum profile. Of course, it was rising here off the bottom, and now we've had a gentle pullback near the zero line with price not going down but losing momentum. And now look, we've got an emerging or a potential bull cross there at the zero line. And if we get that, that's going to be supportive of a move higher. And we've got RSI here in the bullish regime as well. What I want you to take note of, and I think we went over this yesterday, it's really important, like at this juncture, what your strategy is going to be. Let me just go through it one more time. Above 450, are you going to get long, or are you going to wait for the gap, or you're going to wait for the downtrend line to be taken out? Also knowing that you've got the 50 EMA coming right in here at, what is it, 465 and change. So my point is, there's on the bullish side, we've got momentum that is still positive and starting to curl up. We've got RSI and the bullish regime, and we have price above 450, especially here in the pre-market. So, but we've got a lot of overhead resistance to chew through. We've got the gap entry, we've got the downtrend resistance, and we've got the 50. So that's 3 layers of resistance. Now, if it breaks through that should be very, very bullish. But I would not be surprised at all if we make a run into this downtrend resistance or come up and tag the 50 EMA and get rejected there. That wouldn't surprise me at all. It's just, where do you see yourself, in this trade? So I think it's important to have that game plan at your fingertips, so that you're not, discombobulated when you see a green candle or a red candle. You know exactly what you're going to do. SPY 30-minute chart, nice uptrend line. You can see we've got the gap opening here, and I would expect to test that here this morning. So again, know what you're going to do when and where. Qs. 360 has been a good line for us. You can see tradable bottom. We ramped and then fell back. We've spent 4 days between 350, 250 and 360. Here you can see it on the 2-hour chart, which I think gives you a really nice view. Couple things I would point out. You get a break above 360. You've got the gap entry right here around 362. And then you've got a downtrend resistance line right above that will probably offer a little bit of resistance there. But then after that, you can see the intermediate levels, and we're still well below the 50. So if it makes it through these gap fills, then the next big level will be the 50 EMA coming down. And one thing I did right here is I wanted you to notice the double bottom on the 30-minute chart of QQQ. We had a bottom here. Note the levels of PPO momentum and RSI. We came up, we came back down to the same level on price, but we're higher in momentum and we're higher in RSI. That's your bullish divergence. I measured out this W pattern. Here's the left, middle, and here's the right of the W pattern. You get a break above 360. That triggers the formation that projects exactly to a gap fill. So from a technical standpoint, that would be elegant, let's put it that way, to have that double bottom form, come up here, hit a bigger level of resistance, fill that gap, and then potentially turn down. And if one thing I would say, I don't think it's going to happen today, but you never know, a break above 370, I think you go to 380 right away. Why? Because that's a bigger level of resistance at 370. You still have an overhead gap to fill, and then 380 is the big line in the sand off of the daily chart that measured that trading range. So keep those levels in mind. IWM, clear as bell, 304 is your pivot. Above 304, I think you can get long and look for a move up to 206 and then 210. You can see it here on the 2-hour chart. Notice that on this chart, we're above the 2-hour downtrend line. We came up, came back, broke out, I guess it was the day before, but it hesitated, and then yesterday we got a nice move up towards this line of resistance. If price can break above that level right here, I guess it's closer to 203. I think you got a run up to 206, and then as we discussed, up to 210. And that is going to be a big level of resistance should we make it that far. But I think this particular setup offers quite a bit of opportunity. Why? Because we got a lot of rejections along this line, and if price can break above and hold, then all this becomes support with an opportunity to put on about $6 to the upside before things get a lot tougher. Moving on to Facebook. What I've done here is just to give you a bigger perspective on what's happening with Facebook going out to the weekly chart. Of course, if you're day trading this, this isn't going to be much of value to you. But we had a trend line going back for years on the weekly that was broken. Actually, it was broken 3 weeks ago. So that's this week, last week, the week before. Actually a month ago. We're already 4 candles in. So we had a breakdown here on the weekly, dropping out of this long trend line. And so if you're a guy or a gal that's just trying to keep your IRA on a rail, that would have been your first warning shot that things aren't right. Remember, in technical analysis, it doesn't matter whether it's a 5-minute chart, an hour chart, a daily chart, a weekly chart. Trend line breaks below are bearish, and they need to be respected. So if you were a guy that's been in Facebook for years and years and years in your IRA, and you get a weekly break, that's a warning sign. And then on that weekly time frame, price is on the wrong side of the chart. And what you'll find when you go through your charts is bad things usually happen on trend line breaks. And remember, the longer the time frame, the higher the importance. You can see how it's respected that line, going back to COVID back here. You had a break, and then it really went off, and then same thing here. So if you're reviewing charts in your IRA, and you don't want to overtrade it, just focus on the weekly chart. I think that'll put you in good shape. Apple, 60-minute. These lines are working out great. These support and resistance lines. We were down here around 172. If you're an active trader, getting long is a high probability trade because you're at support. Gave you some little tails below, but basically closed every bar right on that 172 level. And then we got a breakout. And now in the pre-market, we're up near 176. So keep in mind, we had rejections here. 176 is going to be, I would think, pretty solid resistance. And then notice right up at 177, 177.25, you've got prior lows back here. that will be your next level of overhead resistance. And I would say on a break above 177.50, then you're probably going to go back up to 180 and possibly 182 to test the all-time high, which was right back here. On the downside, breaks back below 173.50 would open the door to 172, and then a break below would target 168. No changes to Tesla. It's had trouble at 935 and has found support at 910. So really, those are your two key levels today. Anything below 910, I would be a little bit concerned if I was long, because then the door would be open to 880. On the high side, I think any break above 935 would be really bullish, because then all of this will be support, and then you can look for 970 and then 1000. Microsoft. More or less on the weak side, I'd say. Doesn't look quite as constructive as the other ones. We had a big downtrend. We kind of broke out, but then I drew a trend line off of that low, and now we've been below it, but 300 has held twice. Little bit of a double bottom look, but no divergence. You can see here at this low, the PPO is here, and at this low, PPO was lower. So that's a nice example of having, a bottom retested, but without bullish divergence on momentum. So that makes it a little bit more suspect than the case that we looked at earlier. What I've done here is draw a little downtrend line. I think this morning, if you get a break above 306, the door will be open to 310 where there was a gap, and then up to 313 would be a gap fill, and then you can see that 315 has been a bit of a problem going back in the chart. So I think those are your levels. If you see a rejection at 306, I think you can get short for a move back to 300. That's what I would say on Microsoft. And then 300, if that doesn't hold, opens the door to 295. So I would say on Microsoft, relative weakness, but certainly not weak enough where we couldn't see a break out of this little consolidation and to fill the gap. Amazon. Of course, we had the big gap up. We went up yesterday to fill the gap. It was yesterday. Fill the gap, came back. Then yesterday morning, we got a nice back touch of the gap. To the penny. You see the wick, and then a reversal. So now this morning, 32.50 is your pivot, and you get a break above there. I think you're going to go up to 33.15-ish, right in there, would be my target. And this is a good illustration where knowing where your gap is can be really, really helpful if you're trading a particular stock, because they'll often come in for that back test of the top of the gap, and then you'll see responsive buyers there, which we saw here with that tail, and then your buy trigger was 31.50. If you didn't catch the back test, your next opportunity was on the recapture of 3150, and then you got about $75 out of it. So that was a nice trade. Google, our bracket trade worked to perfection. We had the gap up out of earnings. Then we marked the bracket 30.25 on the high side, 29.10 on the low side. We broke the bracket. That was your signal to get short. You were never stopped out. You were never stopped out. It never went above that point after that breakdown. And that makes, I mean, that made it an easier trade than it could have been. Of course, we've seen, a breakdown, then a recovery. In that setup, you get stopped out. But in this situation, proceeded down. We talked about it yesterday. Went down and filled the gap. So that was 29.10 to 27.50. That's a nice trade. So now we've got a downtrend line and we're at support. So as long as price stays above 27.50, you can be long. And if you're not in and you get a breakout above 2800, I would hit it long there, because now the test of both the trend line and the gap has been filled. So now on a break above 2800, I would say my target would be this 29.10. Go down to the bottom of the box, go back up to the top of the box, and then there'll be a decision here at 29.10 if price can gather itself. Consolidation day for Netflix, nothing going on. Still here between 400, 388, whatever, and 410. If you're looking for a long, I would wait for a break of 410, or if it comes back in to these lows here at 397 or whatever it is here, you can get a long against the top of this gap. But if it drops down below, you're going to get a gap fill down to 385. So this tells you how fast it can move in both directions. Now it's just consolidating, trying to decide which way it's going to break. So that's that one. Moving on to semiconductors. Grinding higher. We've got this 278 level. Then we've got a gap at 280 to 283. And then we've got a much bigger level at 287.50. So this is looking more productive. Just keep in mind where your overhead resistances are and where your overhead gap lies. And once, if you got long down here or here and you get a break above, then that would be an opportunity to move up your stops and your strikes for a run to 287.50, or just you could trail your stop up and leave your position size the same. So semis are looking better. Before we jump into commodities, I want to welcome any new guests we have to the channel. I really appreciate you being here early in the morning. If you appreciate technical analysis, if you appreciate having someone that takes pride in getting the levels right, where I can take that task off of your checklist so you can focus exclusively on creating your morning trade plan and then executing around it, then hit the subscribe button, the post notification bell, hit the thumbs up, leave me a comment on anything you wish, But in particular, if you want me to cover off a particular name or a sector, happy to do that for you. Just let me know what you want to see, and I will knock that out for you. And if you want to go the extra mile, we'd love to have you join our regular trading group. You'll find a link in the show notes where you can jump to the blog site, drop in your email, then morning, noon, or night, you'll get all my content delivered directly to your email box. You won't have to go hunting for it or wondering if I've done anything. You'll get it right away. So, and thank you, longtime listeners. I really appreciate you sticking with me. And by all means, if you meet somebody new out in cyberspace, you join a new trading group somewhere else, please pass the link along if you think others can benefit from the work. I would really appreciate it. Let's talk commodities just for a second. Here's our coffee monthly. Many of you are in the long coffee trade. We are in March 65s. Coffee was up 3% yesterday, which was nice to see after some sideways movement. Ran across an interesting tweet yesterday. Coffee inventory. Now remember, all these commodities are physical delivery, right? I mean, for the people like Starbucks and, Folgers and all these people, anybody that is in the wholesale coffee market and buying futures, and the growers, these are all physical delivery instruments. I mean, if you sell coffee at $2.50 a pound in futures, you got to deliver the number of pounds that contract specifies, right? And the buyers of that contract have to take delivery, right? So Starbucks is going to market, buying millions of pounds of whatever they're buying, and there's an inventory, just like there's an inventory of copper at the London Metals Exchange and warehouses. There's warehouses with coffee in them. And the tweet took note of the fact that we are at 21-year lows in coffee physical inventory. Think about that. 21-year lows. Less than 1 million bags of coffee in inventory. And just like a lot of these other commodities, they've been eating the seed corn over the last 2 or 3 years. And what do I mean by that? There's been a shortfall in production. We've had 3 consecutive years of either freezes or crappy crop yields coming out of Brazil that the inventory just keeps going lower and lower and lower. And so now we're down to less than 1 million bags. And I think they're, if I'm not mistaken, I think they're 40 pounds for one. Doesn't make any difference. Whatever that inventory is, they've been eating it for the last 3 years. And so the thing to note is Brazil is not coming on a white horse this summer with a bumper crop to save the day. They just aren't. The trees have lost their productivity because of the freezes over the last 3 years. And so it's going to be what it's going to be. But look at the chart. We were at $3 back in 2011. We're at $2.50 now. And you can see the shape of the curve. We've gone from 95 cents to $2.50, and that's taken, let's call it 14 or 15 months. As that inventory draws down and, Starbucks has to buy. What are they going to say? We don't have any coffee now? I mean, they're going to have to buy, and so is everybody else. So while this does look parabolic, I think there's more juice in the tank. I really do. So I'm staying long. I'm going to be prepared for wobbles. But we do have our JO, the ETF, and we do have March 65 expiration. If we get that move so that we go deep in the money, I think what I want to do is roll that position out, putting little cart before the horse. It doesn't really matter what the commodity is. There's always a pullback. We're seeing a little baby pullback in oil here over the last couple days, but these pullbacks have been very shallow, and they've all been bought. You can see here, I mean, each red bar has been met with 2 up bars, so they're not lasting too long. So I'm still bullish on coffee, and this is our DBA blended ag commodity complex. We're on the weekly. We're pushing 21 now. That's a resistance level, but you can see if I were to, I don't know if I have it. I was going to show you a monthly chart of that, but I don't have it. Let me just show you the daily. We got this breakout here, and we're starting to get acceleration. There's going to be some crop reports coming out that imply that the Argentinian and Brazilian soybean crops are not going to be good this year. So soybeans may be poised to go nuts, and obviously that's part of the ag commodity complex. So we got everything is working for commodities. Fertilizer going through the roof, which rolls into ag commodities, which rolls into food inflation, which rolls into overall inflation. We've got structural issues going on with oil. I mean, right on down the line, almost every commodity that you look at, we are out of. So let's keep leaning on it and see where it can take us. So let's wrap it up there. I hope you like the content. Again, I encourage you, if you got something you want to go over sector-wise or specific stocks, please let me know. I'd be happy to do that for you. So hope you guys have a good day of trading. Watch that bond auction at 1 o'clock. Watch oil inventories. And one last thing on commodities. If this whole Russia, Ukraine, U.S. thing, if somebody waves the white flag and says, cancel that, we're not invading, it's over, and you get a drop in oil, like in 5 seconds, be ready to buy it. It's not going to last. It's not going to last. So I want to be ready for a big rug pull on oil if somebody raises the white flag in that conflict, because I think some of that premium is built in, and if they cancel it, some of that premium is going to come out. But I think there's going to be buyers ready and waiting for that, and I want to be one of them. So have a good day of trading. Been Chris Buss with Traders Profit Compass. Talk to you next time.